Hi, this is Tenzesta Marie Smith with Keller Williams Realty here in Sugar Land, Texas. I've been in real estate for a lot of years. I've worked with a lot of people. And what I find even today is that consumers just aren't really comfortable or knowledgeable about the home buying process, all the pieces, all the factors that go into it. So their mindset doesn't change to say, I can buy a house, I will buy a house. Over the course of the next few weeks, we're going to introduce several videos to you. We're going to introduce videos where you're going to learn the process of home buying, the partners that you need to partner with, identifying your priorities. So we're going to explore each partner. And today, we're going to look at insurance. Hi, again, it's Tenzesta with Keller Williams Realty, and today we have Johnnie Lee from Actsphere Insurance. Now, earlier I told you we're going to speak to a lot of industry partners in real estate. These are people that our consumers, our home buyers are going to speak to. Now, as we have insurance today, we also are going to be covering mortgage and title and survey and other realtors and other consumers. But today we want to understand insurance. So we've invited Johnnie here to give us a hand in understanding insurance, why it's important, the value, and he's going to go in depth with us and tell us why we need it and the differences.
Great.
So first of all, Johnnie, tell us a little bit about your company.
Sure. Well, Tenzesta, thank you so much for allowing me to be here. I really appreciate it. So Actsphere Insurance Group, we are an independent agency. We're based here in Stafford, Texas. So we service all of Fort Bend County, Brazoria County, Harris County, and for the most part, all of Texas.
Okay. So what is it? I know it sounds simple, but what is insurance?
That's a great question. Insurance is there in the event that a person has some type of financial loss, where they have a recovery to repair whatever damages that they may need as it relates to insurance to their home.
Okay, so is all insurances, if insurance covers that, why is there so much disparity in the price? What are the different types of insurance?
That's a great question, and so I heard too. So there are several different types of insurance products out there. You have homeowners insurance, you have dwelling or renters insurance. People that are investors, they might have some type of dwelling fire insurance. You have condo insurance. So there's several types of products out there that individuals can leverage based off of their need. And so in terms of the disparity in pricing, sometimes when you look at purchasing a product, in many cases, there are cases where individuals might not have the exact same coverage. So when you are working with an insurance agent, if one agent provides you with water backup, replacement costs, etc., and another agent doesn't provide those additional coverages that are highly recommended, that can have a big part in the price difference.
Okay, so what's that old saying? You have it and need it, or rather than need it and not have it?
Totally agree. That peace of mind is a huge thing, and that's what insurance does. It provides peace of mind.
Fantastic. So I know, because in real estate, I know that when I work with a mortgage company who funds a project or puts a loan on a house or has leverage on a house, they're going to require my buyer to have insurance. Mm-hmm. So for homeowners insurance, this is where you step in and you give a myriad of options for
Absolutely.
them. And some of them can be high and some of them can be low. Mm-hmm. But tell me what you do differently that will help them to have choices.
That's a great question. Thanks for asking. We like to provide a holistic approach when it comes to insurance, where we're providing options. So in our agency, we do two things. We're going to provide that particular insured two quotes. One's going to be what we recommend, and the other quote is going to be another option that they might want to go with. Believe it or not, most people don't really appreciate insurance until something happens, right? That's when I'm that popular guy. But prior to that, people don't care too much for insurance, and they might be a little bit more price conscious.
Okay, so when I'm working with a client, I'm trying to get them in this house, and we are really close on debt to income ratios and the cost. So to get them in this house, we can't have their mortgage be too high. So sometimes they'll say, well, I'll go on a lesser insurance, and they may take deduct a different deductible or something like that causes them some concern later on. So can you tell us about deductibles and how it's all measured?
Yes, so deductibles, that's a big thing. Obviously, with the deductibles, you are able to have some influence, the insured, where they can say, hey, look, I want a 1% across the board, or I may want a 1% on all of the perils. That's like your water backup, fire, theft, vandalism, but I want like a 3 or 4% on my windstorm. So that might be wind, hail, hurricane. So I want to take a higher deductible on that. By a particular insured taking a higher deductible or having a higher deductible, that just lowers the price. And so going back to that DTI, debt to income ratio, there are cases where an individual might say, hey, look, because the debt to income ratio is so high, Johnny, I need you guys to make sure that the policy or the premium is pretty low. And so we will go in with that partner, make sure that we lower it so that particular client can close. And after they close, we'll go back and make those recommended adjustments to that policy so that insured is properly insured.
But most importantly there, and this is for my clients,
Sure.
is that you're going to give them these two options. And it's really important that they know what they're buying. So I don't want my client, this is my client, maybe not their client, it's my client. I don't want my client to buy $1,000 policy just to skate under debt to income and get insurance and get this house without be given the choice for a properly insured home, because we know that we have trouble, we have catastrophes here, and I would hate for one of my clients to lose their house because they were not properly notified or understood what their options were. So that holistic approach, that's great. Giving them two options, that's great. And I think that might be something that you do differently.
Absolutely.
That's great. I have a couple other questions for you.
Sure.
Because I hear about credit. So as I'm going through this mortgage process and getting them qualified and helping them through all these, the credit is important, or is it important when they're getting their calculations from you?
A great question. So credit is a factor when it comes to purchasing insurance. There are a few carriers out there that do not look at credit, but for the large majority, credit will be a factor. So if a person has a higher credit score, typically that home or that policy or premium is going to be much less than an individual that may have, say, a 530 credit score.
Okay. And then let's see. I also, the terminology, I wanted you to maybe hit on like 2, 3, 4 pieces of terminology that you think are important, like replacement costs, actual value, those things that I don't even know, because I want them to know this terminology. So give us 5 pieces of terminology that you want these people to walk away with.
Awesome. So we always recommend that an insured has water backup, water damage coverage, foundation coverage, replacement costs, not replacement costs on the structure, which is the mortgage company is going to require, but replacement costs on their contents as well. So those are things that's necessary. Also, another piece is seepage leakage coverage. In the event that there's some type of slow leak that might be on the second floor that nobody never visits in the house, that's extremely important. And one coverage that most people don't think about until there's a Hurricane Harvey brewing in the Gulf is flood insurance.
Okay.
Right? That's a really big piece that I highly recommend people have. And if you're living anywhere in America, it's a flood zone. They either have...
This is so true.
Right? You know, some people say, well, I don't live in a flood zone. Well, there's what's called a preferred flood zone and a non-preferred flood zone, where the mortgage company may not require you to have flood insurance. But as agents, or in our office at Actsphere, we highly recommend that every homeowner purchase flood insurance as well.
Okay. So a couple of things. We have actual costs, or replacement costs. So when you're sitting down with your clients and the clients that I'll be bringing to you, when you're sitting down with them, you're going to actually go into detail, not just give a policy and say, here, this is what we have. That's really important for my clients, is that they understand the direction that we're going.
Absolutely. So what we want to do, we want to take a hard focus on making sure that we don't sell a policy, but we build a relationship. And our job is to make sure that that relationship lasts 5, 10, 15, 20 years. And in order for us to effectively do that, we got to make sure that not only do we sell them or stay in front of them at the beginning of the transaction, at the time of sale, but on an ongoing basis, right? In making sure that they understand their product, they know exactly what they have. In the event that something happens, they're not concerned. And in the event that they need us, they could easily pick up the phone and give us a call.
Okay. And can you tell me, what are the insurance coverages that you recommend to all your new home purchasers?
Great question. So it kind of goes back to what I was sharing with you earlier. So if they're a homeowner, right, we are going to recommend that they have replacement costs. And there's a difference, you kind of alluded to it earlier, that the difference between replacement costs and actual cash value. Where with actual cash value, it factors in depreciation. But replacement costs, there's no depreciation factored in, which means when the adjuster comes out to the person's house after a major hurricane, they're not going to say, Mr. Doe, okay, I see that the damages were $100,000. However, because you only have actual cash value, I'm only going to give you $30,000. They will not say that, right?
Okay, so what was the name of that again? That's actual cash value?
That's actual cash value.
Okay, so we all agree that I have $100,000 worth of damage. However, because I chose actual cash value, which might have been lesser of a cost for my premium, I'm not going to be able to recoup
all of the money to replace your contents.
I'm sorry for interrupting you.
No.
I really am. Okay, so go ahead. So that's actual cash value. So, and the other would have been replacement costs. And in that same scenario, what would happen?
So replacement costs, the adjuster's coming out and they're going to say, well, Mr. and Mrs. Doe, I see that your furniture is worth $100,000. Although you purchased it 15 years ago, we're going to give you $100,000 so you can go ahead and recoup everything that you lost inside your house.
Okay. Yep. And you take that's the holistic approach. You take the time to explain the differences.
Absolutely.
Okay.
Absolutely.
Well, do you have any questions for me or anything you'd like to explain to our audience that's starting this home buying process?
Well, you know what? I tell you what. Tenzesta, based off of what you're doing, I think it's so good to be able to offer that value added piece. There's a lot of realtors, loan officers out there that just don't do that. And there's another group of folks that they make sure they pride themselves on that. And obviously you fall in that category.
Thank you.
So I think it's really good when an individual or when they are able to understand exactly what they're getting, what they're paying for, and have the ability to reach back out to to their agent or their insurance agent to be able to say, hey, look, I do have questions. So we just don't leave them alone once the transaction's done.
Fantastic.
Yep.
Okay, well, thank you for coming. And I'd like to leave my audience with one thing, is that remember that insurance policy, you've got it in your file cabinet, in your drawer, on your computer. Take a look at it. If you don't understand it, I ask you to reach out to your insurance company and ask questions. Do you have replacement costs? Do you have actual cash value? What are you really working with? Thank you very much. I really appreciate you coming today.
Thank you, Tenzesta.